video number 2 of trend following secrets, where we'll go over everything about trend following. So in the last video, we covered how to understand the chart and how to read it a bit better from a trend following perspective. And now we're kind of going to get into the strategies of trend following and why it works. So again, trend following is the idea that we follow the trends in the market. It's the idea of surfing. So when we surf, our job is to catch a wave and ride it, because that's where the momentum is, that's where the strength is. And when you're riding a wave, it's easy. If you're trying to surf and stand on a board when there's no waves or going against a wave, it's not going to work out well. But if we can jump in a wave that already has power, that's already moving, then we'll be able to surf easily. And that's the concept of this. We aren't looking for stocks and hoping to find the bottom. Like, we're not trying to catch a bottom and hoping it's going to turn around, or we're not trying to catch a top and short it and come down. What we're trying to do is we're trying to find stocks that are already building, already have momentum and strength to the upside. We join it, and then we follow that nice ride up, and then we sell it, right? Because a stock's number one job is to make us money. So why would we be buying something that's falling lower? We want to make sure we are buying strength, and there are a ton of ways to do that. So as we discussed in the last video, we need to make sure that we're watching the trend. So we need to make sure that we're following the trend, aka a line that is trending higher. So that is going to be our first step. But again, there are so many different ways to do this. So again, as I mentioned in video number 1, your 2 top ways of following the trend once you know a stock is trending, aka it's going from the bottom left-hand corner to the top right-hand corner, is you want to make sure that you either buy the dip, which is going to be your approach on using dojis. So for instance, when you come in here and you see a candle with a long wick and a small body, long wick, small body, forming at a support level or at a trend line, that would be a perfect place to buy or dip buy a stock. You also want to buy the breakout. So you want to buy above resistance levels. And so that's going to be your second way to follow the trend. Find a stock that is trending up and buy above resistance levels. Here's a great example. You can see if we chart this out that there was a resistance level right here. We know the stock is trending up over time. It broke above resistance. We bought, and we can follow the trend up. So again, you can buy the dip, which is a bit more risky unless you're following a doji candle. Or you can buy breakouts as well. Again, there's pros and cons to each. You can also, if you go into your indicator section, again, the trending band indicator, I don't have access to right now because this is my real account, but it's the band that's used inside the Impeccable Stock software, which works well. But I'm going to give you some other ways to do that, and that is going to be a moving average. So if you go in here and type in moving average, again, by default, it's going to give you a 9-period moving average. We're going to go into the settings and adjust it a bit. So if I go into the inputs here and you adjust it to 200, your 200 moving average will also be a great way to see trend as well. So this is a very simple way to see trend. So here we can start combining things together to generate more of a trend following system. So the idea behind the 200-day moving average is that if the stock is above this line, then it's trending higher and it's bullish. If the stock is below, then it's bearish and going lower. So again, that's a general thesis, but how can we put this into a strategy? Well, as you know, we were kind of charting out trend lines in the last lesson. Well, you can see here, if we pair a trend line with the moving average, you can see here the moving average will also act as support. So having the trend line here, having the 200-day moving average here, having a doji candle form, this is a great area to dip buy a stock, because there's so many different factors building in to saying that, hey, there is support here on this level, and it gives you just a better opportunity to know what's going on. So pairing a moving average with your trending lines is going to be a great way to do it. So again, I'm going to show you a bunch of different indicators throughout this video to help you with this. But remember, price action is key. Understanding and charting out trend lines is going to be your number one key to success. And so make sure you're always doing that, because price is key. Indicators will help, but they're not solid. So anyways, the 200-day moving average works as well. If we go into our settings, it's reloading the page. Sorry about that. Anyways, let's see if we can. Okay. Now we're on SPY, which is a completely different stock. Anyways, so we did the moving average. Let's do a moving average again. But instead of using the 200-day moving average, which is what we used at first, we're going to come in here. Hey, look, I got my impeccable stock band. we're actually going to change that to a 50. So your next one is 50. So again, 200 shows a longer term trend and 50 shows a shorter term trend. That's because our time that we're looking back is shorter. So for instance, what 200 moving average means is that it's taking the average of the last 200 candles. So it factors in a lot more time. So that's why it moves slower and shows longer term trend. 50 MA shows the average price over the last 50 candles, so it's more adaptive and closer to recent trading prices. But as you can see here, this also acts as a support level. You can see here, we see it bouncing on these levels. So when we can start combining price action, which is understanding, for instance, that this is a trending stock, so we want to buy the dips. We have a doji and it's forming at a support level, and that we can use that as a dip buy criteria. That is how we start combining moving averages and price action to find our trend following entries, because it's easy to find a trending stock. A trending stock is going from the bottom left to the top right hand. The hardest part is knowing where to actually buy those stocks. And so again, buying where we can find support is going to be our best levels for trend following, especially on a moving average regard. The impeccable stock band here is probably the go-to method for following the trend. Again, so you can actually check that out here by seeing that, which is available with the impeccable stock software. But if you don't have that, the moving averages works great. Trend lines work just as well. You should always be looking at trend lines, and then you can also use RSI to judge some other things. So if we come in here, what we will be doing is looking at the relative strength index, is what it's called, a relative strength index. You can see here what this does is this shows us how strong a move is. So you can see here that when our trend is starting to go up, you can see here that we're starting to have some strength to the upside as the RSI moves higher. But again, you can see that there's too much strength here and it starts to wane out. Too much strength, it wanes out. So basically what it's showing is that the market or the stock has strong movement to the upside when it's in this range from the middle to about 70 is when there's a great range, which means there's movement and strength behind the move, which you can see here. This move is trending up and it stays within this range the whole time. When it gets above it, that means that we're pushing a bit too much and it's too exhaustive, so you'll probably see a sell-off at that point. Here means that the trend is weak, and here means that it's so weak and at a good price that people may start buying. So again, that's kind of how you use RSI to kind of break down the trend and seeing it from a strength and energy play, because again, trend is all about finding where the strength is and where momentum is and following that. So if we can use things to see how much or how strong this trend is, that is another great way to put the odds of success in our favor. So again, that's one more. And then again, I would say, as always, if you're following the trend, your two type of entry criteria is, I mentioned this before, but this is crucial: buying the dip or buying breakouts. And you can identify those levels through trend lines, through a 200-day moving average, through a 50-day moving average, and also through RSI. So again, for trend following, that is our regards. It's actually much easier than you think. Again, if you want a step-by-step system, you can kind of play around with adding those together and messing around. But again, trend following really is not that hard. It's finding the strength and sticking with it. Statistics have shown that it's not really where you buy exactly that makes you all the money. It's knowing when to get out at the right time. So making sure you're getting in on strong points when the RSI is between those levels, buying in on dips with the doji candle and with the trend line to support it, and then getting out when the weakness or when the stock is starting to look weak. And so again, that is kind of how trend following works, and I hope that makes sense. Again, if you want to make sure you got a full understanding of this, rewatching video number 1 and video number 2 will do great. Anyways, guys, thanks for watching. See you in the next video.